Welcome back to Trading 360. I'm Nicole Penelides, live in New York City. It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Mike Shorr, Director of Trader Education at Prosper Trading Academy. Thank you both for being with us. So, Mike, the first name on your radar here is FedEx. Why is that?
Yeah. I continue to love material handling and logistics. We're finally seeing, not only are we seeing some move off the lows, we're seeing rejection of support after that move up. So FedEx, we're right at that spot, right at the 200-day moving average, that if we can take out today's highs, that's gonna be my target to get in.
I see. Okay, what are you thinking here, Ben, as you take a look at this chart? It's at 227 today.
I think the recent test of 192, which held, and as Mike just mentioned, we're trying to recover off that low, is important. We'll look at that in a weekly, but you know, right now, if you take a look at where things stand at $227, we're basically in the middle of a range that we've been in. If you go back to the beginning of January, here you can see we topped out around 266 and have really just struggled to find direction since. Now, hanging out around 225, but again, this 192 area is going to be key. I'll show you why I think when we look at the weekly in just a second. But before we do, let's have a look here at the daily time frame. So you can see while on the hourly there hasn't been a lot of directional conviction one way or the other since the beginning of January. And here you can see that this really kind of, this sideways consolidation, wide range consolidation, I should say, goes all the way back to the fall of 2020 for the most part. 200, again, 192 to the downside to 320 the upside. Here's that 200-day moving average that Mike just mentioned in terms of recently testing above and kind of holding on it right now. But I mentioned 192 is significant here. Let me show you why. Because on the weekly time frame, I've kind of got my eye on two different areas of consolidation that formed most recently. Number two, again, these are elongated and these are very long lived here, but you've got the lower extreme around 86, the upper extreme around 319. So that move we just looked at in terms of the selling from 266 down to that 192 area is just a small part of this bigger picture move lower. But I always talk about when you have these ranges, you get a well-defined upper extreme and a lower extreme, but we also mention oftentimes how it's very important here to keep an eye on the middle of this as well. Notice where this recent pullback again to 192 sort of stalled out. So this is something encouraging for the bulls because the fact that they couldn't get through the middle often opens up a door for a retest of the upper extreme. I say if you do make your way through the middle, it opens up a door for a retest of the lower extreme. But in this instance, again, support held, gives the bulls something to build on here. It'll be interesting to watch over the next couple weeks.
Right, a great chart there. You see that wider range, but watching that 200-day and the breakout is what you were noting, Mike, right?
Yeah, I was actually looking at the rejection at that 216 level. That right now, that's kind of the confluence of your 50 and 100 day. So it bricked there hard. So realizing that we do have to get a little bit above where we are, but if we do, we got a lot of clean air in front of us.
All right. So let's leave it there and go to Roblox as we take a look at that now. Hit a new 52-week low of 2165 not long ago. Tell me a little bit about this one, which in 6 months is down about 60%. Yeah.
So there's kind of a kicker on this one. So just this would stand alone on its own, but with prices down this much and with all of the hype and everything about the metaverse and everything like that, that's a big space where there's not a ton of players that they could easily get bought out here. Kind of like I think a couple of shows ago I was talking about Netflix. Same sort of thing, but that's something that at the very least is nice to have, not necessary for this trade. We've been sideways for, at least until mid-May. We finally are breaking out here. We're testing that again. So, all of these plays, it's really hard because we're off the lows. I'm not even going to say that the lows are in, but we're off the lows. Now it's like, well, do you want to sell things that are still about a quarter, 3/4 of the way down from its highs? That's really tough. So I'm still looking for these breakout type of plays, and Roblox seems to be a thing that, talk about, you just said it, 60% down on a space that people really want to be in.
Right, understood. What do you think, Ben?
Well, Mike said it. Sideways since May for the most part. Let's dive into the hourly time frame. You can see that we're trying to get something going to the upside here, though. This is key. Still holding below some resistance, which I'll point out in just a minute, the next level to get up above. But again, you can see bottoming out beginning of May around $20. We just posted a higher low up around 24. And here you can see how we're taking out some key areas. But again, for the most part, we have been somewhat sideways. Are getting a little bit of a lift here, testing an upper extreme. Let's move away from the hourly time frame. Here's the 4-hour, because you guys were talking about the weakness. So I wanted to kind of put this most recent move up that I just mentioned, again, 20 to 24, higher low in this attempt to get something going into this $40 level into perspective. And you can see that we have been and continue to be trending lower. Now, guys, last time we talked about roadblocks, we were kind of building this area here into the, I think it was the end of May, beginning of June. And so you can see how we continue to consolidate, but now just sort of grinding higher. Remember, we were talking about the significance of the upper, the lower extreme, but also the middle. Well, in this instance, we're kind of watching the middle of balance area number 5, because until we get up above that, we have the working assumption that we're still seeing value forming at lower and lower levels. We're just testing an upper extreme right now. So keeping an eye on this attempt to get through the $40 level. But, you know, again, sort of speaking to some of that weakness, again, in the overall bigger picture here is a look once at the, well, I've got the daily time frame here to kind of bring to attention that 100-day moving average that Mike pointed out, and he's got his eye on it, looks like, in terms of the notes I saw. And also here, as we look at the weekly time frame, this really speaks to the declines you guys have been talking about. Now, you can go all the way back to the end of November. We're talking 141, but I was really looking at since the beginning of January this year, guys, down, it looks like actually up only 10 times on a weekly basis here. So you can see, again, the pressure that this one's been under. Here again, though, trying to get something going to the upside, but kind of getting back into quickly into that 4-hour time frame. I think the area to watch right now, not so much the $40 level, which is where it just recently traded up to, but it needs to get something going with conviction up through 45, 46. That would sort of bring, again, that working assumption that we're trending lower into question.
And it's sitting at 38 right now, 38.22. So you're talking about some of these numbers above the $40 range. And when we think of Roblox and in gaming, metaverse, technology, Mike, where does this all fit in with your trade?
You know, I do lean on the technicals. I mean, of course, you do have to do a little bit of research, but at the very least, it's not what you would consider a dead sector. So, I mean, if things grow, if the economy grows, if stocks do lift, there's just a lot of room. And this is one that, you know, people are going to, like I said, they're going to talk about buying the company, or it's vastly undervalued, or at least to where it was. So, and remember that, you know, my trades, I'm only going out a few weeks. So actually the trade that I have is actually targeting that 46 level that Ben had mentioned earlier.
Yeah, tell me a little more about the trade specifically, Mike.
Yeah, just a simple call spread going out to August 5th. 43.46 call spread. We don't have to worry about earnings or anything like that. If anything, you could see a little bit of lift into earnings. So that 43.46 call spread, trying to pay about 75 cents for it. I haven't priced it out since this morning, but I mean, that gives you a really nice 3 to 1 return.
Right. Okay. Any final thoughts, Ben, before we get to the next one?
Well, just again, if you look at this daily time frame here, you can see that 100-day moving average, I think, is going to be pivotal at this point. In addition to the fact that, you know, in terms of the structure that I identified on the hourly, we're testing this upper extreme right now. It just coincides here with this 100-day moving average. The bulls want to see it get up above and through this level, but also up and through 46. The bears want to see it fail here and roll back over.
Okay. So let's get to the next one, and this is in a totally different sector, and this is in the world of energy, looking at Ovintiv here. Tell me a little bit about this one, which came off the recent highs, but just like the group, much of the group is down 30% in 1 month. Ovintiv, Mike.
Yeah, you know, so, you know, what we are seeing, and since this is, Ovintiv is mostly U.S., Canada type of stuff. So, you know, a lot of the shocks that you've been hearing about in natural gas are because of Russia, Ukraine, which, you know, this company doesn't play in a lot. We have a ton of this stuff. And then also with the processor fire earlier last month, then they can't get that stuff, even the stuff that they wanted to put out to the globally, they can't get out of that port. So that means they got to dump it here. So that's why you're seeing this price. So we are moving up a little bit. I'm playing off of that resistance at the 200-day moving average for this one.
Okay, so watching that moving average, which I'm sure Ben has in his technicals, right, Ben?
I've identified it. Yes, I have it. We'll start with the more granular, though. I wanted to start with the hourly time frame here, and really just the move that we've seen from 63 down to 37. Just pointing out here the move since the beginning of June here, and the price decay that's been playing out. Significant, to say the least. Now, I did want to just take a step away from this intraday look here and move a little bit more into a daily time frame and show you here. You can see he's mentioned the 200-day moving average. You can also see, well, actually on this chart it will show it a little bit better, the migration of value that we've seen from 210, again, all the way up to the $65 level. So a significant move to the upside. This is actually the daily time frame again. But, you know, I think what's important is we just tested the lower extreme of this range where we'd found support around the $40 level. We're going back to mid-March, retested that back in the middle of June. So taking that out was key. But notice here, again, we didn't get through the middle of balance area number 3. So the price decay significant, as mentioned here, from that $65 area-ish, we'll call it, down to recently 37-ish, but did not take out the middle of 3. So again, that trend to the upside of the working assumption that we're continuing to form value at higher and higher levels remains intact. The bulls want to see this get through the $52 level. We talk about the middle of the range being significant. Lower extreme test fails in a trend environment to the upside. Work your way through the middle. We could open up a door for a retest to the upper extreme. But yeah, I think this is a well-defined trend higher here, one that just recently tested to break out to the downside and failed to take out key areas of support.
So it's interesting here because, you know, I might have bet that you might have said to buy the dips here on Oventive, but that's not what you're saying, Mike, right?
No, and I'm playing it's slightly neutral because I'm doing a calendar. One of the big things that I liked about this, there aren't weekly options in here, but the July, which has nothing to do with earnings, is actually quite a bit above the July implied volatility is quite a bit above. So actually just sitting here or even going a little bit higher, you're going to be just fine because of that decay coming your way from the short July. But then I made this into a calendar, which actually you can see a pump up into earnings coming up in implied volatility. So that might work for you. So it's directionally bearish, but there are a couple ways that this can, at the very least, not hurt you very badly.
Understood. And Mike, what's your big picture thought these days? I mean, a lot of the analysts have price targets that are higher than our current levels, you know, by the end of the year. How are you feeling about the market overall, and what are you watching?
I am more bullish than bearish. I'm piecing into things, and everything that I'm doing is basically as short of a time frame as I can, because this economy sentiment is turning on a dime, and you know, I would say that we're seeing more positive news than increasingly negative. But this isn't, hey, look out, we're just going to be blasting through, you know, new highs or even testing even close to where we were. But as far as saying, hey, listen, just sell everything, go right ahead, I'm not in that camp.
Okay. Good to hear both your thoughts on all these names that we took a look at today in the Big Three. Mike Shorr, Prosper Trading Academy, and our own Ben Lichtenstein. Thank you both for being with us.